the music.
Welcome back to the Anthony Lee Crypto Channel. We are live on this Sunday afternoon, guys. How is everyone? I hope you're good. Finally, here in Mississippi, we have some beautiful weather, nice and sunny. It's been rainy for almost 2 weeks, like downpours, heavy lightning storms, wind, all that good stuff for a couple weeks. Finally, we have warm, sunny skies. Let's see who we got in here so far. We got a little light crew today. We got Max and Johnny here. What's up, crew? How you guys doing? Title of the thumbnail is I was wrong, guys. I was wrong. I'm going to go out. I really believe, I honestly believe, I know this is a smaller YouTube channel, okay? I know. But I do kind of browse around at some other larger channels. And I really think we were the first to say the bottom was in based upon the weekly confirmation of the money flow crossover. I really think we were the first. I saw some people who came a week or two after and started talking about that, but I didn't see anybody talking about that before us, and I'm not bragging. But I'm going to be the first. I think. I haven't seen anyone else. Salt Chain, what's up? I think I'm going to be the first to say I believe that stat is going to be invalidated. I know it's a 100% stat. I know it has never been invalidated. I know it has always signaled that the bottom of the bear market was in. I think it's wrong. I think this time it will lose its 100% status. Let me fix my screen. I got a little something going on here. I know what it is. I just got to fix it. Let me readjust this slightly. I did something a little different yesterday, and I had to adjust my screen size. I think that's good. We're going to roll like that. All right, so I'm going to be the first to say I think the money flow / RSI is going to be invalidated. I gave a full video on this yesterday. If you missed the video, I'm going to do a little quick recap of it today. But if you missed it, and what I'm about to go through is just going to be, I'm going to hit the highlights. I'm going to breeze through all of this. But if you want more in-depth reasoning behind each of these stats I'm about to give you, go to the channel and watch this video from yesterday, Bitcoin's macro bull versus bear case. It's a little bit longer video, about a 30-minute video, almost 40-minute video, but I go in depth about each one of these statistics. 100% stats, guys, stats that have never been broken. None of these stats have ever been broken. I go into the case for bull versus bear and why the bottom is in versus why the bottom may not be in. So either way it goes, some of these 100% stats will be broken. You cannot have the bottom be in or the bottom not be in and some of these stats not be broken. So it'll be interesting to see this cycle, which one of these are broken. Excuse me, guys. Hot warm. Happy Sunday. All right, so let's look and see what Bitcoin's doing now. Hovering about 81.2, 81.3, somewhere in there. Kind of bouncing from the battle zone here. We've had this battle zone on the chart for about a week. We knew it would be a struggle in this area. If Bitcoin should close a day or when CME opens, whichever comes first, we'll see CME open first. There will be a little gapola to the downside at about 80, right at about 80K on spot. It'll be about 80.385 on CME, which was right at about 80K for spot price. So if price finishes somewhere around here when CME opens, we should have a little gap to the downside. We'll see if it gets filled today. Usually about now-ish, they start working the way down, and then they open somewhere around the gap. Usually, not always, but usually. So we'll see if they start winding their way down there. One interesting thing that I saw is Warren Buffett. You guys know who that is? He's like, I don't even know where he is on the list of richest people in the world. Top 10, probably top 5. Probably 3 or 4 richest people in the world. He gave an interview, and He has sold a large portion of his portfolio, $400 billion, guys. He owns, or is the founder, CEO, whatever, Berkshire Hathaway, and he is sitting on $400 billion in cash. He sold most of it in the last few weeks. He said he's worried about the stock market. He said, here's his quote, people are in a people are in a more gambling mood now than ever. Okay, guys. He said today's stock market is like a church with a casino attached. He is worried that a major crash is coming. You can go on and read the full article, but he's worried that a major crash is coming. So he's cashed out a large portion of their investments. And I'm going to show you the last time. And I'll tell you what, Warren Buffett, normally I don't listen to people like this. Jamie Dimon of Chase. You know the guys, the stock guys, Kramer, all those guys. Normally, when they tell you something, they're being paid to tell you something, or they have incentive. If they want the market to go up, they're going to tell you that everybody's selling, and it's a terrible thing. That's just the way it goes, because for them to sell, you have to buy, and vice versa. So I always counter trade that kind of stuff. But Warren Buffett is not. I mean, he's an elite, but he doesn't really care. He's kind of like Trump. Like, he's an elitist, but he doesn't really give a damn what his peers think, right? He doesn't really care. He kind of just marches to his own drummer. So he's not really incentivized to tell you one way or the other. Warren Buffett's going to do what Warren Buffett's going to do, and he's not really incentivized to mislead the public. And I'll show you one thing I like about him. Have you guys seen his house before? Warren Buffett bought this house. I've seen this before, but he bought this house in 1958. I mean, it's a nice house. It's all right. I guess it's a nice house. He bought it in 1958, and he still lives there. This guy's worth like almost $1 trillion. And he lives in this little house that he bought in 1958. So, he doesn't care. Like, he doesn't care. Like, money, you would think with his portfolio value that money would be his thing. I mean, I don't know him personally, but clearly he's not all about image and, living the fancy lifestyle. Like, he doesn't care. So he's not saying these kind of things to mislead you or I. He's just telling you what he's doing. And let me show you a picture, a screenshot. The last time Warren Buffett did this, the last time Warren Buffett spoke like this, the last time he cashed out a large portion of his portfolio. Let's see if I can make this a little bigger. There it is. This is what happened to the SPX the last time Warren Buffett sold. Warren Buffett did not become the top 5 richest people in the world by being stupid, and he has a modest at best home that he bought in 1958, so he doesn't care about impressing people. He's just telling you what he's doing, and he just sold. So I really think, and Warren Buffett, his article did not sway my decision to say that I was wrong. As a matter of fact, seriously, I already had this thumbnail created. I was already talking with Catherine today about it, and I just found this article about 15 minutes before I came live. So last time Warren Buffett heavily sold. Just keep that in mind. Keep that in mind. All right, we're going to roll through. Let me get rid of this Warren Buffett stuff. We're going to roll through the reasons for the bear case and bull case. Again, if you're just joining us, I put out this entire video yesterday. You can go watch it right here. So 37-minute video. I'm about to recap everything that was in that video, but I'm not going in depth. Okay, I'm not going in detail. The detail is here. Okay, 37-minute video. I'm going to do a recap on it in probably a total of 3 minutes. So if you want to see more in depth of this stuff that I'm about to go through, go watch this video right here on our page from yesterday. And before I do that, guys, I meant to tell you, I posted this in Discord earlier, but I've been working on with MEXC. We're partnered with MEXC. Where did I post it? Right here's a link in Discord. I will hit the chat with it right now. Also, if you do not have a MEXC account, you can get you a MEXC account with this link, and also a free 1,500 USDT just for signing up for a free MEXC account, completing KYC, and depositing $100. That is all you have to do, and you get a free $1,500 to trade with. That's it. They have other bonuses there also that you can get free money with. This is in addition to those. Also, if you already have a MEXC account and you've never deposited, you can follow this link and deposit that $100, do the KYC, and you also will get a free $1,500. This is for people who have never deposited or do not have an account. If you have an account, you've already deposited, all that kind of stuff, well, then just create you a new account, bro. That's all you got to do. It's a free $1,500, literally. This expires May 31st. Joe Bowers. What's up, bro? Salt Chain says, I missed that yesterday. I'll check it out. Yeah, it's a good video, I think. It's a long video I posted, but it's good. It's informative. If you care about long, and listen, I could be wrong. I could be totally wrong. But I'm just giving you my opinion. And more importantly, I'm giving you the facts, the stats. So you can formulate your own opinion based on stats. Wendy, I'm so glad you were here. All right, guys, let's dive into it. So, bear versus bull case. Here we go. All of these, every chart that I'm about to show you, every indicator that I'm about to show you, everything is on the Bitstamp chart because it has the most history. It has the full history. The only chart that I'm aware of that has the full history of Bitcoin. So just keep in mind so that you don't wonder what chart am I looking at. Most of these, I think all except 2 of these charts, I'm about to show you 12 charts. Real quickly, I think all of them except 2 are on the weekly, and 2 of them are on the daily. I'll let you know when I get to the daily, but everything else is on the weekly Bitstamp chart. So here we have the weekly Bitstamp chart. There are 2 metrics on this chart. Let me turn one off. We have in white, we have the RSI, weekly RSI crossing below the 30 line every single time as indicated the bottom was in. There was one small exception where you got to dip down on a major, huge 1-week capitulation candle right here that dropped about 25+%. That is the FTX scandal. Shy of that, without that FTX scandal, FTX collapsing, selling, dumping on the market. Every other time, there is when RSI at the bottom of the screen here, RSI has dropped below 30. You have already bottomed. That was the bottom of the bear market. Okay, you did not go lower. Okay, to reinforce that, let me turn on Cypher. That's not Cypher. There's Cypher. Turn on Cypher, and the green vertical bars. These mark the first time coming out of the bear market when you have money flow. This green and red flow down at the bottom. Let me close RSI. When you dipped into the red coming out of I'm talking the majors, macro, the weekly, big green wave here hits into the red. That's in the bear market every time. That first confirmation close back in the green, you have always had the low been in. You've never mitigated the low after that. Every single time you got it there, the low was already in. Green confirmation weekly in the green there, the low was already in. Same thing here, even with the FTX. By the time you get the confirmation in the green, the low was already in. You did not violate that. So fast forward to current price action, and with RSI has already crossed, let me pull RSI back up. RSI has already ticked below the 30. And we have already had our confirmation weekly money flow close back in the green. So these have never, ever before come back and set a new low, new bear market low, never. So both of these are 100% stats. So it is 2 stats in the column for bull case, that the bottom for Bitcoin is in, okay? Both of these stats. Let's move on. Next up, this looks a little messy. I'm going to kind of clean this up a little bit. We have 2 fibs here. Let me go with one of them first. This is just our macro Fibonacci level, right? Hang on one sec. All right. Macro Fibonacci levels from low to high and the bear market low. Okay. So each and every time, each cycle, the bear market has bottomed at or below the 786 fib. Back in 2014, in the 2018 cycle, in the 2022 cycle, and now current cycle, each and every time. Even though you're going to have people say, well, diminishing returns, we went up less, so we would expect to go down less. Okay, I hear you. That makes sense, but that's wrong. First cycle, we went up 52,000%. Next cycle, 12.8 thousand%. Significantly less, right? About 80% less. You still went to the 786. Okay, next cycle, you only went up 2,000%, about 80% less, right? of an increase, you still went down to the 786. Here, this cycle, we went up only 700%, significantly less, okay? So diminishing returns, yet every single time has been a 786, 786, 786. This particular cycle, we front ran the 618. So not only have we not gone to the 786, we didn't even test the 618, okay? So this is a 100% stat that we always go to the 786. So far, that has not happened. Now, obviously, if this happens, we will go lower than the low at 60K, right? Which means this would invalidate the two previous statistics that we looked at with RSI money flow. So either way it goes. If this one never goes to 786, then this stat is wrong. If it does go to 786, the RSI money flow are wrong, okay? All right, let's move it on. Next statistic. Can't even speak. We're looking at the weekly bear drop zones. So basically what that means is when you come here, and you can back test all of this, go watch the video from yesterday. You come here, you're in a bull run, you come up, you set these highs and lows, and you come down, and eventually you get a big bounce, right? Into the drop zone, bounce here. When you come back through it, you break. You bounce here. When you come back through it, you break, right? So this is zone 1, zone 2, zone 3. Okay, here, same thing you're looking at. We've come down, big bounce, bounce in zone 1, bounce at zone 2. You bounce back and retest zone 1, and we haven't gotten to zone 3, right? You see, when you come back after the bounce on zone 2, bounce on zone 2, and you come back and retest into zone 1 before crashing back through zone 2 for zone 3. So zone 1, 2, and 3, bear market zone test, 100%. Go back, test it on the rest of the bear markets, 100% stat. If we do not come back for a zone 3, if we don't come crashing through zone 2 and find a zone 3, this 100% stat will be invalidated, okay? Remains to be seen so far. All right, let's move on. Next up, we got FOMC chairman or chairperson. It got to be PC here, guys. Chairperson swear-ins, okay? Janet Yellen sworn in back here. Let me turn the magnet off. Janet Yellen sworn in back here. Leading up to Janet Yellen's swear-in for the FOMC chair, we had a little rally into it, and then the first week she was sworn in, 24% drop, followed by 51% drop over the month, and as you can see, it really just led to the last leg down of the bear market, right? Next swear-in in 2018 was Jerome Powell. My vertical bar is hiding it, but you rallied into the swear-in. First week he was sworn in, 26% drop, followed by 20% drop the month, and really you could see it just led again to the final leg down in the bear market, okay? Next swear-in, this was Jerome Powell also. He stayed in office, but there was still a swear-in ceremony, and you can't see it here. It's kind of hard to see. You might get to see it a little bit. You see this red wicket. You rallied up into the swear-in. He had the ceremony, 7% drop first week, followed by 40% drop, and you can see clearly it just led to the last leg down of the bear market. Bring us to today, and we have a swear-in ceremony scheduled for this coming Friday. And actually, it may be the following Monday. They have not announced yet. What happens on Friday is Jerome Powell leaves office. This is his last day in office. All these other swear-ins were on a Monday. So even though one of the expiries, this expiry here was on a Saturday, they waited till Monday to swear him in. So it wouldn't surprise me if they waited till Monday to do the swear, and they just haven't said yet. So we don't really know. Either way, not this week that we're starting today. Because whether they swear him in on Friday or on the following Monday, we will be looking at the following week's candle to see if it holds the trend of big move down, okay? Big move down. So, yeah, we don't really know yet, but we're looking at 1 week away. We should start the big drop if we don't start it sooner. So this is the 100% stat that the low is not in. This has always led to the final leg of the bear market, which led to lower lows, right? So we shall see. There's another marble in the bear column, guys. All right, let's look at our bear leg fractal. This is our fractal from last cycle. I'm on the weekly time frame. Again, Bitstamp weekly time frame. All I did was grab this fractal and attach it, right? And so far, it has been 100%. May not be candle for candle, day for day, week for week, exactly, but the structure is 100%. You're getting bounces from the same target areas you should be getting bounces from. You're lasting about the same amount of time you should. I didn't have to change this. I just overlaid it. Getting bounces until we've been looking in the next week or two. I mean, it could happen this week, next week, but right in here to start that final leg down, this is a 100% stack, guys. So far, it's 100%. Now, I know this one's a bit stretching. It is a fractal. I hear you, but I'm counting it. I'm counting it. Next. Okay, we are switching to the daily time frame. We're looking at the 200-day SMA. Okay, I'm on the 200-day SMA. Go back and back test this if you like, but let's go all the way back to 2014. We broke below, heading on the bear market, broke below the 200-day SMA. You tested it multiple times. You came and bounced above it this first time, but I mean, this doesn't even count really, because this is just a wick. You never actually closed a day below it, so this wouldn't count as a recovery of the 200-day because you never actually closed. And you know, we don't go on wick basis. We go on daily, at least daily closing basis, especially on the macro. So the first time you back tested it, yeah, you kind of sort of closed above it for a day or two, but and then for about a week here, you kind of rode just above. Ultimately, this was a breakdown. This was a failure. You rejected from it. You were unable to pull away from it. So your first attempt at it and your second attempt at it, you just rejected and moved on down. It wasn't until your third and fourth attempt that you're able to successfully kind of break away from it. So first attempt at 200-day failure, moved to next leg down, big leg down in the bear market, right? Let's move forward. 2018, you can see you tested it 3 different times here unsuccessfully. Same thing here. You came down, wicked it pretty good, and then came back up. But when you lost it, 1, 2, 3, 4, you continue to bang your head against it and it continue to push you down even further each time, leading to the final leg of the bear market, 100% stat. Same thing here. Let's fast forward to 2022. Exact same thing, guys. You came down, you crashed through it, just a daily wick, came and closed back above it. But once you actually lost it here, your first attempt at it, rejection, and then leading down for a major correction, all the way down to the bottom of the bear market, right? So you never really ever successfully got above it. Again, this doesn't count. You crashed through it. You couldn't even close a daily below it. So it's like the wick, wicks don't count. You know that. You guys know that. But once you initiated the bear market, this was it. And actually, you front ran this. You didn't even have to touch it, which means we don't actually have to come back up and touch this. You front ran this. Go back and look. I'm not fixing to go through it all, but you can clearly see you front ran it on all of these occasions here. Front run. Both of these were front runs. I'll zoom in here because some of you are saying, no, it's not. Look at that. You front ran it both times you came up here to it. So you didn't actually come up and touch it. You got close, but you didn't. None of these times did you actually touch it. And let's look at today. We are currently at it right now. I'll zoom in on this. We're currently at it. Again, front run. So could you come up and break through it? Sure, absolutely you could come up and break through it. As a matter of fact, there's a weekly. Let's switch to the weekly. I'll show you a weekly 55 that I'm kind of interested in. Should we make it up there? I think would be a really interesting target, not just because of that. It's just it would retest the zone above. You can see clearly our zone above here, right? You come into there, retest the zone, weekly 55, and then start a rotation down. So there's a lot of other things. There's a CME gap somewhere in here, 702 retracements, just several good things right here. 702 from the 98K to 60K. So several good things right here. So this would actually be a good target if Bitcoin wants. It doesn't have to push up even higher, but if it wanted to, I can't see it getting much higher than that 86K. Let's call it 86K. But either way, this is a 100% stat that you are unable to successfully reclaim and pull away from the 200-day. Doesn't mean you can't close a candle or two above. That's the weekly. I'm sorry. It doesn't mean you can't close a candle or two above the 200-day SMA, but you have never retested it on the first time and pulled away. In fact, you have never retested it coming out of a bear market for the first time and not initiated another leg down in the bear market, okay? Again, we looked at one period of time where we got above it for about a week. We just kind of hugged it. We didn't come way up here above it. We just kind of slightly wicked above it and came back to it and just kind of held it, and then lost it, right? We looked at that. So that is another 100% stat. Let's keep going. What are we looking at here? Here we are, days. I'm on weeks, sorry. Weeks from lows to highs, okay? Let's look at the highs first. So from the bottom of the bear market to the top of the next bull market, in the first cycle was 153 weeks. Cycle 2, 150 weeks. Cycle 3, 150 weeks. So 150, 150, 153, pretty much the exact same, correct? All right, let's look at the bottom. Everybody's saying this time is different. Cycle 1 was 59 days from high to low, 59 bars, 59 weeks, 52 weeks, so 59 weeks, 52 weeks, 54 weeks. So all right in the 50-something weeks. This cycle from high to the 60K low is only 17 weeks. Could it be different? Could it be super sped up? Sure, it could be. People are saying, oh, it's super cycle, it's super sped up, it's this and that. Well, maybe, but the time it took to get from the bottom to the top wasn't sped up, not at all. So if it's super cycle, then it is just starting right now, and I do mean right now, because people screaming super cycle, we've been in a super cycle. Well, no, we haven't. It took you 150 weeks to reach the bottom of the top, so it has not been super cycle. It doesn't mean it's not now. Doesn't mean we're not headed up, but every other cycle has been 50-something weeks from top to bottom, 50-something weeks. And here we are at 17. We're a little further along now. Where are we at now? 30 bars, still not 50-something, but we're at 30 bars now. But from the top to the 60K bottom was 17, and that's what we're measuring. Okay, so it's a 100% stat that says we are not at the bottom. Okay. Let's move on. Here's our diving board springboards, okay? We've covered this. I'm not going to go through them all again, but you can see when price is rising up, but you're setting higher lows, that's a diving board. You dive down. And then finally, you do this pretty much the entire bull market. And then when you start the bear market, you start diving boards. Okay, you springboard it. Excuse me. Let me restart this. When you're moving up, you have springboards. That means you're setting lower lows. Price is kind of going down. You know, it looks like a bull flag. And you spring up. Right? And then you set lower low, spring up. What you're doing is creating bullish divergences. And then when the bear market starts, you start setting a series of diving boards. So these are springboards. These are diving boards, which means price is trending up. You're setting bearish divergence on most of these. You dive down. Trend up, dive down, trend up, dive down. At some point, you'll come to the bottom of the bear market where you'll set in a macro springboard and you can spring out. Until that happens, in my opinion, there's not enough divergence to get you out of there. And then you can see once you do spring out of there, you spring. Well, we're on diving boards now, guys. Dive up, down. You trend up, you dive down. You trend up, you dive down. And eventually we should come and set a new springboard in which we can create some good bullish divergence and spring out of there, then start creating more divergences, right? Just like this. That is ugly. That is terrible. That could be the worst drawing. You get the point. We should set a springboard and move up and out. We don't have that right now. We're still diving up and down. Okay. That is another 100% stat. We do not have a macro springboard. Go back and look at other cycles too. It's there. And that's just common sense, you know. On the way down, you're bear flagging down, and here you're bull flagging up. I mean, that's just, you know, you guys know that. That's trading 101. Let's move it on. Volume spikes. I'm back on the daily on Bitstamp. Volume spikes. We're looking for triple volume spikes, big volume spikes on the daily time frame in a bear market. The third ends it every single time. Okay, you can see you have volume kind of down here. It's a little bit elevated some, but mostly down in here, right? Well, you have 1, 2, 3 volume spikes all of these, big capitulation wick, big capitulation wick, big capitulation wick. The third was it. That was your bottom, right? So 1, 2, 3. That is 2014, 2015 bear market. Fast forward, guys. Let's go to 2018. You can see volume kind of down in here somewhere, right? You see that? And then you start the bear market. You set in the high, and that's where we start looking. Volume spike 1, volume spike 2, volume spike 3. Okay, that's it. Boom. Time to go. 3 volume spikes. You're also creating your springboard here on the macro that we just looked at, right? Let's move forward. 2022. All right, here you can see volume kind of down in this area here, right? You got the high right here. Then you start the bear market. Once you start the bear market, you got volume spike 1, volume spike 2, volume spike 3. Not as high as the ones in previous years, but clearly way higher than average volume here, right? And that was capitulation wick, capitulation wick, capitulation wick, right? Boom. And you also created your springboard up and out. So 3 daily volume spikes. Let's come look at current price, guys. Current price. By the way, all of these were on declining volume too before that last week. You can see it was already low to begin with, but you had decreasing volume, and they were all that way. Which means, like Warren Buffett said, price is being moved up by gamblers. People are gambling. They're getting liquidated. These are gamblers, guys. Gamblers being liquidated. That is why price is moving up. The volume's moving down. These are not buyers. These are people shorting. And when they get stopped out or liquidated, it's creating buy orders. It's triggering buy orders. So anyway, we had the top here, guys. Let me just delete this orange line. It's really annoying me. I can't get it straight. Had the top here, guys. Started to move down. You can see our volume is about here, right? The larger, especially through here, the bear market, larger cluster of volumes about here. Yeah, wick 1, wick 2. That was big capitulation wick, big capitulation wick. We have declining volume here. Price is moving up. We do not have a springboard. We're going to be looking for one of those big capitulation wicks. It's going to look something like this, guys. It's coming. I don't know when it's coming, but it's coming. It's going to look just something like that, a big capitulation wick, and you're going to create your springboard up and out, guys. It's coming, guys. This is a 100% stat. The triple volume spike is a 100% stat, guys. So there they are. That is a quick recap, and let's bring it over in format here. Our 100% bull versus bear stats. There are 2 bullish 100% statistics that I can find. If you have more, please let me know. I will be glad to look those over and add them to the list. I can only find 2 that are 100%. Bear stats. If you have more, let me know. I'll add them to the list. But I could find these 10 stats that have been 100%, never once been wrong, that says the bottom is not in. I was the guy. I was yelling for the last few weeks, the bottom's in, money flow is king. However, when you got 10 versus 2, that means you have 12 100% stats and 10 of what is more likely to be broken? 10 100% stats or 2? That means of the 100% stats that I could find, macro stats regarding the bottom of the bear market, 83% of them say the bottom is not in. 83%. You would have to have 83% of these 100% stats. You would have to have 83% of them be wrong for the money flow to be right. That's not including Warren Buffett, guys. That's not. Warren Buffett's got to count for at least 2 or 3% on his own, right? So 83% based upon historical data, historical statistics, the bottom is not in. The bottom has always been 12 months after the high, always. So I'm telling you guys, I've just flipped the script here. I just think this is, the more I look at it, the more I see bear market rally. I mean, it looks just like the previous bear market rally, guys. It looks like every other one. And I promise you, a lot of you, this is your first bear market. I've been here this is my third. And they all felt just like this. All of them. I mean, gosh, I remember like every one of them. Like even right here, I was like, okay, here we go. We're recovering. Oh, got back into the zone. We're back in the zone. We're going to expect the rotation to the high. Nope, never got there. Same thing here. This was a scary drop. And that was a massive bounce, and we just all thought V-shaped recovery. Here we go. Nope. Back down, guys. And this feels the same way. It feels the exact same way. It's like, okay, coming down, you came down hard. We all felt, okay, we're just going to kind of bounce a little bit and probably roll back over and set another low. And when that didn't happen, it started to feel like, oh gosh, okay. I mean, maybe this time is different. We didn't roll over real quick like we expected. But the more I look at it, it's just taken a little longer to get back up to this area than it did in previous cycles, but it doesn't mean it's not doing the exact same thing. Okay. The difference is the volume is just so freaking low, guys, that it's not getting up there fast because nobody's buying this. Nobody's buying this. I mean, even on the weekly time frame. Look on the weekly, guys. Just even on the weekly, look how low volume is. And I showed it to you on the daily a minute ago. It's not only is it low, it is massively decreasing. There's no buyers. So for each one of these push ups, you're not having buyers push it up right here. You're having to have shorters come in short. They push it down a little, buyers step in, liquidate, move it a little higher, short. They push it down a little bit, buyers step in, move it up, liquidate them, move it a little higher. They're having to grind this thing up because there's no buyers to just rip this thing to the upside. I'm telling you guys, when you see volume falling off this dramatically with price moving up, this is a recipe, guys. This is a recipe for a massive red liquidation, volume spike, and volume candle down. This is a recipe, and it's coming, guys. It is coming. Believe me as I sit here, it is coming. I just believe it now. I didn't believe it. I did not believe it before. I believe it now. So that is my stance. I have flipped my opinion on this, and I think we have another low. I think we have another low coming, guys. You can just see, look, this volume is even higher than we are with current price. I'm on the weekly, but you can see it's still decreasing. Boom. And then that big candle, that big volume capitulation. Let's see. Yeah, so same thing. It's just same thing, guys. Same thing. Volume's a lot easier to see on the daily. I mean, you guys get the point. You get the point. But that's it, guys. That's all I got. Thanos, what's up, bro? What is up? Wendy says Trading 101. Yeah, I just recapped all that. I said it would be 3 minutes. It's probably more like 15. Should we see some indication? Hawkborn says we should see some indication of this with Jerome Powell's replacement then. That should be the beginning of that. Most likely. Most likely that's going to be the buy the rumor, sell the news event. There's also rumor, you have to find the articles, about the crypto bill passing this week. I think that's being priced in currently. And if that passes end of next week, along with the Jerome Powell, the Kevin Warsh being sworn in, which we showed back here, right here, that every time there's a new chair swear in, that does it. That's it. It's a buy the rumor, sell the news event. We've seen many times in history when there are things like crypto bills or ETFs, all that kind of stuff. Those are buy the rumor, sell the news events. So you could have two perfect storms of buy the rumor, sell the news events coming to a head at the end of this coming week. So we could definitely see that trend back down. In fact, I do think that's when it happens. I'm going to switch. Here's another 100% stat, but this is only on a monthly basis, so we're not going to go through this. I'm not adding it to the list anyway, but we're looking for this. We put this on the chart. I'm on the daily time frame. Put this on the chart on April 30th. This is the move up we were looking for, followed by the move down. We could come a little higher. Again, this is based on historical monthly averages. I got to explain this to people. You'd be amazed. This is the historical average, which means sometimes it went a little higher, sometimes not quite as high. The average is in the middle. So it could come a little higher and still be valid. However, 85% of the time in the month of May, the high or the low has come in the first week. Okay, so there is an 85% chance. This high was set on the 6th. There's an 85% chance that's the high. 85%. So that means 15 times out of 100, you might come a little higher before heading down. I don't really have an opinion on this. I don't really care if it wicks up here tomorrow and then comes down. I do think it's coming down. And even if it doesn't come down this week, I do believe that either next Friday or next Monday, whatever day they swear him in, they haven't announced, but if they swear him in here or if they swear him in here, it's usually on a Monday. But Jerome officially leaves office on Friday, so they're anticipating Friday. They just haven't announced it. Whichever day it is, I think, is when this starts, if not sooner. All right, guys, questions? Just a little short update here. I won't keep you guys too long. You guys feel free to screenshot this, bull case versus bear case. And again, if you have other stats, either to add to the bear list or the bull list, I don't mind. I would rather have more. The more data I have to go on, the better I can make my decisions. But as of now, with 83% of the 100% stats, that sounds funny, 83% of the 100% stats indicate the bottom is not in. Okay? And in fact, technically, there's only one stat that's 100% for the bull, because the weekly RSI was technically violated with the FTX scandal. I know it was a scandal. Without that, this probably doesn't get violated, and I still counted it for the bull case, mostly because we have the money flow to go with it. And the two of them combined has never been wrong. So the combination of this is a 100% stat. But if you want to be technical about it, there's only one stat that I can find that the bottom is in that is 100%, and that is this one. That is that one. Salt Chain's was clinging to that fractal, was still hoping for 55K, was his past tense, Salt Chain. That means you're not any longer? What about the fractal? The fractal is still intact. The macro fractal, that's good. I'm glad you brought that up. Some people are going to say, oh, the fractal, the fractal was violated. You were showing us the fractal is violated. Yes and no, okay? The fractal that we were looking at, let me see if I can find it. Let me go to my springboard charts. I have to go to the daily time frame. I really don't remember where this was. Gosh, I hate it when I do this. I don't know where I put it, guys. It's got to be on. Oh, gosh. It's driving me crazy. It's got to be. It's a good question. I want to show you this if I can find it. I don't know if I can find it. I don't know where I have it, guys. I'm sorry. I really don't know where I put it. But we had a fractal on here, and that fractal kind of sort of maybe this is going to be frustrating to me. I'm going to find, as soon as we get off, I'm going to find this and be frustrated that I couldn't find it. But I really don't know where I put it. So I feel like I'm stalling now. I am, because it's frustrating. Maybe I accidentally deleted it. Anyway, we had an inverted fractal on here, and I bet I have it in Discord. I bet I have it in Discord. Here we go. Inverted fractal. We've had this on here. And we're kind of shooting up out of here a little bit, which would indicate this is invalidated. Maybe not. I don't know. It doesn't matter. This is an inverted fractal from our area right here. Let me erase this. From our area right here. We took this, I flipped it, and put it on this, okay? Because we were coming into it here. It's kind of the same area we're in, right? But this time we were coming down, so I flipped it to see how it would behave here. That fractal may or may not be invalidated. I don't think it's invalidated. I'm going to have to find it. I mean, I could do it right now, but it doesn't matter. I'm looking at a more macro fractal. That was just kind of for some intraday trading, trying to kind of catch some highs and some lows here, intraday day trading. But this is the macro fractal. This fractal has not changed. It has not been invalidated from this entire time. So just because we were looking at another one for trading purposes doesn't mean the game plan should change. And I understand, like, I'm one of the main ones was like, okay, game plans change. But this is the macro fractal here. Let me turn off my magnets. This is the macro. I messed this up with my magnet. Sorry, guys. There you go. You see how that lines up there? So all I did was grab this from here and drag it over here. Structure remains, guys. Structure remains. I know, Wendy. I know. I got flustered there for a second. I could feel it. My pulse started racing. I got terrified. I was so scared. I hate it when that happens. Like, I'm usually pretty well organized. And Jane will tell you, like, I'm not going to talk bad about her. But I could tell you, we have a junk drawer, with all sorts of stuff with. I could tell you, and you just throw things in the junk drawer. It's full of stuff. I could tell you where everything is in that junk drawer. Jane, I'll talk about her. Jane can't tell you where her cell phone is 90% of the time. You should have seen her this morning. Hey, I was sitting here at my desk, and her phone was on my desk. She came down here in my office yesterday, probably at like noon yesterday, and left her phone on my desk at like noon. And then this morning at like 6 o'clock this morning, she's looking for her phone. So, yes, she has not even thought to look for her phone in, 18 hours. And she walked everywhere. And I knew what she was looking for, but I didn't say anything. I was just going to see how long it took her to figure it out. And she walked and looked everywhere for her phone. It was sitting right here. And it's like that all the time. But I can tell you where everything is. I'm just OCD like that. So it is absolutely driving me crazy that I can't find this inverted fractal. Like, it is bothering me. I must have accidentally deleted it. I went through and added all this stuff onto the charts. I don't know if you see these folders over here. I added all this stuff on the charts. See, I can turn it all on and just really clutter things up nice. I added all this on yesterday so I could have it on one chart. And then I just turn them off when I want to show you guys one at a time. And I must have accidentally deleted that fractal because I don't misplace things. I'm not saying I'm perfect, but I don't misplace things. Very rarely. All right, guys, any questions before we go? I have officially flipped my stance. And listen, I'll tell you another thing, and you guys are going to think I'm crazy. But I'll tell you another reason I really flipped my stance based on my own stats, these 100% stats that I gave you for real. However, I am more confident in my flip because if you get out there in YouTube land, Twitter land, wherever, and you start looking at these quote-unquote influencers and blah, 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 they are all flipping bullish to where, okay, You know, we've gotten to looks like we're going to wind our way out of here. You know, we're going to come up into here, probably small pullback, retest this, and then here we go. You're starting to see that more. Whereas down here, everybody was like, down in here, but it was like, okay, a little bit of a bounce. Oh, here we go. Oh, just took the high. We're going down 40K. You were hearing that stuff, right? And I was one of them. I really thought we were about to head down. Not here. I thought we would take the high here and then head down. And this is the fractal we were looking at. You bounce, you come down, you high, you swoop the high, and then move down. We were looking at this fractal. We did not look at this. Okay, I admit. But usually, I'm telling you guys, usually, because let me tell you guys, those people on YouTube, and I'm one of them. I mean, I'm a very small one, but even their bigger channels, and I'm not knocking those guys. Some of them are good traders. Most of them are freaking terrible. But none of them have the money to move a market. Okay? They're all retail. Okay? They are all dumb money. I'm not calling them dumb. That's what it's called. Dumb money and smart money, okay? Retail is dumb money. That's what it is. Whales, market movers, people like that are smart money, okay? That's just the terminology. I didn't invent it. I'm not calling them dumb. I am one of these, okay? Dumb money, most act on emotion, okay? They feel like we got to move up and out of here now. Smart money, people who actually have the money to move a market, understand that. And when you start feeling that way and you start putting your late longs in, they know you're acting on emotion, and that's when they do this. Okay? So when you start to see an overwhelming number of people start calling for new highs, a new this, a new that, can they be right for a time? Sure they can. But that is usually your sign to get out of the way. That is usually your sign that a big old dump is going to happen. And same thing, when we're down here, and myself included, the rest of us were calling for a little bounce and then 40K. That is usually your sign that we're going up. Because people who have the money to move a market don't think like we do. And even if they do, they've learned through years of practice and discipline to put it aside and act rationally and not emotionally. So that adds to my personal confirmation, along with the stats that were headed down, because retail is starting to get on board with headed up. Finally, here at 82K. Nobody was on board at 60, 62, 65K, though. But now all of a sudden, 30% later, they want to get on board with it. No, thank you. Get out of the way. We're headed down. Just my opinion. Oh, you know I'm going to post that I found it. Of course. Of course. Thanos, sell him, may walk away. Agreed. Agreed. And guys, this is probably not going to happen overnight. I mean, look, this whole thing took, 3 months? It could easily take that longer. I mean, if you're going to go by the stat is 100%, that it's going to take until October. If that stat holds, it's October. We've always bottomed 1 year from the top. You would probably get something that looked... Oops. A lot like this. You could push up a little higher. I don't know. I don't really care. Let's say you do. Push up a little higher. Then you're going to get something like this, like this, like this, like this. Something like that. It's going to give you this nice head and shoulders bottoming. You're going to get your springboard there. Your bullish divergence there on the macro. Swoop this out. Wipe everybody out. Grab all of this liquidity right here. V-shaped recovery. Grind back in this zone right here. See that zone? I know I'm looking like scribble here, but you got this zone. You're probably going to grind it out in here. And then your next breakout of it will be the real one. It's probably going to look something like that, guys. I wasn't believing this until a couple days ago. I was going by the money flow. And I just don't think so. It's just too overwhelming. Too much would have to be invalidated. Too much 100% stuff would have to be wrong for this one thing to be correct. And just the structure doesn't look right. If nothing else, the structure doesn't look right. You just don't have it. You just don't have the divergence there. You don't have it. You don't have it. You can get moves up without divergence, but you don't usually get reversals or macro moves, all-time high stuff. You just don't have it. You just don't have it. You just don't have it. I mean, you got lower low, even on RSI, lower low. You just don't have it. This is the weekly time frame. And in my opinion, you need it. Something like that. This comes back over, something like that. Boom. Anchor, trigger, weekly divergence. Probably a fake out back into the red, and then you come to the green on money flow, something like that. This will make you a good momentum wave head and shoulders. Also, same thing on RSI, good head and shoulders here. You can see that. Shoulder, head, shoulder. Something like that, guys. Just kind of like you had here. See, last cycle, let's look at RSI down here. I mean, it may not be the prettiest. Shoulder, head, shoulder, boom. And what happened? Lower high in the oscillator, lower low in price. Created that good divergence right there with the head and shoulders up, and away she went. It's probably going to look something like that, guys. It's a little bit uglier, but you could call that a shoulder, head, shoulder, something like that. Something like that. Hell, you even had it way back here. Shoulder, head, shoulder. Gone. You don't have that here. You don't have it at all. Not even close. It's trying. It's trying. Just need something like that. Get you that springboard in there. All right, guys, that's it for me. I'm going to get out of here. It's a good Sunday. Go enjoy the day. I love you guys. I will see you guys. The Lord loves you, too. Don't forget about that. I will